Dollar dollars dollars dollar dollar. Dollar dollars dollar 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 few. Things have a ha over us the way that money does. It can make our dreams a reality and give us the freedom and security that we desire for many of us. It's the reason we make that dreaded morning commute, working long hours so we can pay our bills and feed our families. But money also has a much darker side. It can destroy lives, lead people into an addictive spiral of gambling and law breaking, and it can even drive people to commit even worse. But when we take a step back and think about it, the idea that a simple piece of paper can have so much control over us begins to appear more and more absurd. So exactly how does money work? Who controls it, and what happens when this control is lost? Over the millennia, countless monetary systems have been employed around the globe, allowing economies to grow, populations to thrive, and helping people to live their lives comfortably. Today, money is a vast global commodity, with countries trading trillions of dollars worth of produce to one another. It's a system that plays out on an almost unfathomable scale, but it hasn't always been like this. Hundreds of thousands of years ago, things were much more straightforward. Before money existed, tribes would make trades using primitive exchange systems, such as bearing a simple but limited process of trading one thing for another. For example, a tribesman may offer a large supply of grain and another tribesman in return for the equivalent value of livestock. However, this system requires both parties to have a coincidence of wants, meaning one person must want livestock and the other must want grain. As tribes grew into communities and communities into populations, the limitations of this system became more and more apparent. A new system was needed, and that's where money came in. Early currencies used naturally occurring objects such as seashells and animal teeth as tokens that could later be exchanged for goods. But these soon gave way to the more familiar-looking coins that we still use today. At first these were simple metal coins, but by the time of the Iron Age, these had evolved into gold and silver coins that carried the same value as the material that they were made of. Paper money was first introduced in China during the Song dynasty in the 11th century. This was simply due to a nationwide shortage of the copper which was used to make coins, but over time the benefits of this government-issued paper money became more and more apparent. It was more practical and easier to produce. And as the centuries passed, more and more countries began to adopt a similar hybrid system of coins and paper money. When trade routes started to spread globally, economies grew to vast proportions. Money's grip over the world began to tighten, eventually becoming the all-consuming behemoth that we know today. As we entered the modern age, the standardized monetary system came to be known as the gold standard. This system meant that a country's currency was directly linked to its gold reserves. This system was first implemented in England at the beginning of the 18th century, but before long many other countries began to adopt this method, including the United States. In 1879, countries which adopted the gold standard agreed to set the value of their currency to a specific amount of gold. This fixed exchange rate provided stability to international trade. However, this system would be completely abolished by the 1970s. This was in part to the limitations it imposed on governments. Having a currency that was tied to a commodity meant the government had less power to influence the economy, and ultimately its citizens. 1971, when President Nixon took the United States off the gold standard, I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold. So if a dollar is no longer linked to a commodity such as gold, what exactly is it that gives it its value? Well, that power now lies within the hands of the government and an economic institution that we call the Federal Reserve. The Fed was founded by Congress in 1930 to bring stability to the economy. It's now considered the most influential economic institution on the planet. It's controlled by a board of governors who are appointed by the president and confirmed by the Senate, and it's these people who are responsible for those small inconspicuous pieces of paper in your wallet becoming the most sought after commodity on the planet. Cold hard cash, when money is established in this way by a centralized bank, it's known as fiat money. They're motivated to get the fiat, so they want to invent something in order to make more fiat. Fiat money is used today by almost all major global economic powers. It includes the Chinese yen, the British pound, the euro, and of course the American dollar. The term fiat comes from the Latin word meaning let it be done, indicating that the value of fiat money is established by government decree. When a government declares its currency to be legal tender, it can then be accepted as a medium of exchange for goods and services within that country. Its value is based on the stability and credibility of the government, as well as supply and demand within the economy. This is a symbiotic agreement between the government and its people. The people must have faith in the government if the currency is to be accepted. It simply put, the dollars in your pocket have value because the government says that they do. The Federal Reserve sends this money to banks and credit unions, which in turn is loaned out to their customers and distributed into the economy. Now these loans are necessary evils when it comes to growing economy. We need them to buy houses and cars and other materialistic things. Some people may even take out a loan so they can start their own business again, contributing to the economy and the gross domestic product, the total market value of the goods and services produced by a country. Think of the Federal Reserve as an all-powerful puppet master looming over the economy.